We've had a great rally in gold and a tremendous rally in silver as well. So precious metals have moved significantly higher, but what a lot of people don't realize right now is that the dollar has had a big pullback. The US dollar, that's topped out, basically in October. And then you also have this war going on in Russia and Ukraine. And you'll also see, very often we'll see, especially on a global scale like this, where you have NATO kind of almost antagonizing Russia on a daily basis, bringing more and more troops, weapons in there. And people are saying, hey, I'd rather own something tangible. And I think that's really the big catalyst for gold right now. I'm not a bear on gold, but I still think that 1500 level is alive and well. And, I would be very careful owning gold up here at this area. If you own it, I would start to protect it. I'm not bearish gold at the moment, but if I do get a sell signal, I think the next leg down takes you to that 1500 level, which will be the ultimate buy area. If gold is very overbought and extended now, as it's basically above 1900, sitting around, I guess, the 1920s. But I do believe if we get any kind of major correction, gold could deflate. And if it deflates, the floor, I think the floor for gold is 1500 handle, whether it's 1520, 1550. That's debatable. I'm not sure yet. I'd have to look at it when it got down there. But I think that's going to be your chance to really get into gold for the long term. And then I do think gold ultimately breaks out to a new all-time high. I'm not expecting 5,000 like a lot of people are, or 10,000. But I think in the realm of, high 2,000s, maybe even a break of 3,000 is most likely. But I do think that, you got to be careful up here. The one thing I will tell everybody is that when everybody loves something, I always want to move away from it. Right now, you have so many upgrades going on in gold, so many big firms upgrading gold. And in all fairness, there is a lot of gold buying going on right now with central banks like China, India, Russia. They are buying a lot of gold, but it's just too bullish of a trade at this stage of the game. So if you own it, I would start to protect yourself. I wouldn't be a buyer up here. A lot of times what will happen, and I'll give you a great example of this. If you go back and you look at September 1st, silver put in a bottom at 1740, I believe. Prior to that, it had hit 1800 and it staged a pretty good rally. And then it came back down and made a lower low where everybody got bearish on silver. And myself and my members, we not only bought SLV, SIL, which is Silver Miners ETF, and a bunch of other silver plays, but we actually bought physical silver back then and bought coins, and we were paying $4 over spot. Now try to buy a silver coin, it's like $14 over spot. So again, timing is critical in this business. And a lot of people don't realize sometimes that markets will still make moves. They'll still get bounces. Nothing goes up and down in a straight line ever in this business, whether it's a commodity or a stock. It's just not the way, markets work. They work on emotion, they work on mathematical configurations. And, that's still, I would love gold right now had it hit 1500. Had it hit 1500, I would say, don't sell a single ounce, but it didn't do that. So that tells me that it still may come back down there, and I think it will. Silver is leading gold, and I think the silver bottom is in already. So what I'm waiting for, I've exited all my silver plays, but we hit the ball, we hit the cover off the ball, so to speak, because we nailed the low, and then I got out very, very close to the recent highs. And now I'm just sitting back and waiting for it to retrace or give me a bit more of a bullish pattern to get back in. I do believe silver ultimately heads above $30, and I'd love to be able to catch that in the high teens ultimately. It's really going to be about the pattern and not so much the price, because silver's been almost resilient as it's just gone sideways here for the last month. It really hasn't broken out to new highs, but it hasn't been breaking down either. So it just goes to show you how strong it's been. And, silver is in every single product that we use now, whether it's a computer, a cell phone, a laptop, it's in cars, it's in all of these solar products. They can't run without silver. So you have an industrial demand, and you also have the physical metal demand. And that's just a very, very good 1-2 punch. But if you can pick up silver 18, 19, I wouldn't even care about the pattern. I'd say just get right in. The dollar can still rebound again. And a lot of people have the misconception that the dollar and precious metals can't rally at the same time. And I've seen them do it from time to time for upwards of over a year. So they can rally from time to time together. The one thing I would note here is the reason why precious metals are going up is people are starting to lose faith in government. They are losing faith, at least here in the US, I see it. We have a big divided country. You have politicians that continue to divide. You have this left-right paradigm that's going on. And that's just telling you, investors are saying, I'd rather own something tangible than own something that's, out of the land of make-believe. So when you look at precious metals right now, people are saying, hey, I need to own gold because there could be a world war. I mean, just yesterday, I'm hearing this, Armageddon clock, we're 30 seconds away. Whether or not that stuff is true or not, what's the ultimate safe haven from the beginning of recorded time? It's been gold and silver. That's what people used as real money. It cannot be printed by government. It's not elastic. I believe the last time I checked, the most gold that is mined in a single year is a 3-foot Olympic-sized swimming pool. And that's throughout the entire world. So that's really not that much when you think about it, for an entire world of 7 billion people. When you look at the governments right now, whether it's, Republicans and Democrats, these people just spend money endlessly. They just have, a checkbook that has no limit to it, or a credit card with no limit to it. And people are starting to say, hey, they're going to, Fed is raising rates are going up. They're going to start paying, debt, have to service this debt. How are they going to do it? I feel more secure owning precious metals. And that's why I'm in silver and gold as well. I mean, I've been a firm believer for many years. I'm not the so-called gold bug because I tell you when I think it's going to go down. I tell you when I think silver is going to go down. And when they fall to really good levels, that's where I snatch them up. And I buy both the physical and I'll trade it via the products that are out there, like the GLD or the SLV or the GDX or any of those gold miners are a good play to play, silver miners as well. So again, I try to tell everybody, it's not a one-way street in the markets. It doesn't matter if it's the commodity market or the stock market. So basically what the Federal Reserve has done in this, well, first of all, they said there was transitory inflation, right? They said inflation was transitory. We all know they were dead wrong. Now they're saying that they need to go to about 5% on the Fed funds rate, which is the overnight bank lending rate. Currently, they're roughly at around 4.25. And that's kind of where the 2-year Treasury note yield is. So the old saying for us veteran traders that have been around for a long time, we call ourselves dinosaurs. We know that the Fed, when they get to the 2-year, the Fed funds rate gets to the 2-year Treasury note yield, that's kind of it. The Fed doesn't really need to raise rates anymore unless the 2-year yield starts to spike higher. So they've kind of gotten to what we call mission accomplished, but they're going to overshoot a little bit because you still have a lot of inflation out here and they need to be able to cut rates down the road a little bit. So that's why they're going to go a little bit higher. They keep, promising they're going to go to a 5% rate on the Fed funds. And we'll see if they do that. My guess is that they'll probably get close to that. And then ultimately they'll stop or even cut as, the markets will go lower. So, that's where we are. We have geopolitical events. We have rising rates. This is just a backdrop of a very choppy year. So I think traders better brace themselves. But the Fed should continue to raise. They'll probably just go, quarter point increments, but they'll try to get it up towards that 5% level.